Today's number is 122 billion, as in $122 billion. That's how much money OpenAI just raised in a single funding round, the largest private funding in the history of Silicon Valley, in the history of technology, and in the history of venture capital. $122 billion for a company that still isn't even profitable yet. More on what that means here in a minute. Well, while you were sleeping yesterday, 30,000 people woke up to an email telling them they no longer have a job. Not from a struggling startup, no, but from Oracle, one of the biggest, most profitable enterprise software companies in the world. Net income up 95% last quarter, and yesterday morning, an estimated 18% of their global workforce found out via email at 6 a.m. that they're gone. No warning from their managers, no meeting, a cold email at sunrise. The reason? Well, Oracle needs the money to build AI data centers. Meanwhile, OpenAI raised more money yesterday than the GDP of most countries, and Anthropic, the company we talked about on Monday, the one that accidentally left its internal model documents into public databases, well, they did it again. Different leak, same week. It's April 1st, and I wish some of this were a joke. I'm Don Michalik, and this is your Morning Intelligence for Wednesday, April 1st, 2026. Here's what you need to know today. Oracle just executed what may be the largest single layoff in tech history. And the way they did it is more important as the numbers. OpenAI closed a $122 billion funding round with a condition attached that is genuinely wild. Anthropic leaked 500,000 lines of source code, the second major security lapse in less than a week. And Google quietly launched a feature that turns your headphones into a real-time language translator for free. In today's deep cut, the VC who's funding the AI revolution says most AI layoffs have nothing to do with AI at all. And we'll close with a reminder today that today is in fact April Fool's Day, and AI has already made that a problem. Let's go ahead and get into it. On Tuesday morning, employees across Oracle's global operations, the US, India, Canada, and Mexico, received termination emails from Oracle leadership at approximately 6 a.m. local time. No advance notice from their managers, no HR meeting, no heads up. Just an email at sunrise telling them it was all over. Access to company systems was cut immediately upon receipt. TD Cowen estimates between 20,000 and 30,000 employees were affected. That's roughly 18% of Oracle's 162,000 person global workforce. If the high end holds, it would be one of the largest single layoffs in tech history. Entire teams were hit. Oracle's revenue and health sciences units and their SaaS and virtual operation services units both confirmed reductions of 30% or more. Now, here's the part that makes this a different kind of layoff story. Oracle didn't cut because the business is struggling. No. Last quarter, they posted a 95% jump in net income, $6.13 billion. They have $523 billion in contracted future revenue. The reason for the cuts is explicit. Oracle has committed to $156 billion in capital spending on AI data centers. To free up the $8 to $10 billion in operating cash they need to fund that build-out, they're eliminating human headcount. If you've been listening to the show, you know we covered the Q1 tech layoffs yesterday. 60,000 tech jobs cut in the first quarter, 23% citing AI. Oracle alone would account for roughly half of that total. So why does this matter to you? Well, this is an AI and job story in its starkest form. Not a startup running out of money, not a company being disrupted, a profitable enterprise software giant. The kind of company that's been safe career bets for decades, decided that AI infrastructure is worth more than the people who built the business. If you work at a large company, and a lot of people in this audience do, the math Oracle just did is the math your employer is looking at too. Not, can AI do this person's job, but do we need this person's salary more than we need another data center? The bottom line here, Oracle didn't fire 30,000 people because the business was failing. They fired them because AI infrastructure costs more than people. And they told them at 6 a.m. in an email. If you're wondering what the AI transition looks like in practice, and not in a forecast, not in a think piece, well, this is it. All right, let's get to our rundown today. The company behind ChatGPT just raised the most money any private company has ever raised in history. And one of the conditions attached to it will make you do a double take. OpenAI officially closed a $122 billion funding round yesterday, valuing the company at $852 billion. To put that into context, that's bigger than Coca-Cola, bigger than Chevron. This is a company that is yet to turn any profit whatsoever. The investor lineup tells the story. Amazon led with $50 billion. NVIDIA put in $30 billion themselves. SoftBank put in $30 billion. Microsoft also participated, but their amount remains undisclosed. Now, here's a detail that should make your ears perk up. $35 billion of Amazon investment is contingent. It only counts if OpenAI either completes an IPO or achieves artificial general intelligence. That's right. Amazon has turned AGI into a financial instrument, a $35 billion bet on a technology that does not currently exist. One more thing worth noting here. Individual investors are getting their first access to OpenAI shares through ARK Invest ETFs, ahead of the expected IPO. So this is no longer just a venture capital story. It's starting to become a personal finance story. So what? Well, if you use ChatGPT at work, and statistically, I think a lot of people do, this tells you the company behind your tool isn't going anywhere. But $852 billion in valuation on a company that still loses money creates a lot of financial pressures on them. And investor pressure always, eventually, shows up in your product or your price. If you have an ARK Invest ETF in your 401k or brokerage account, check it this week. You may already have indirect exposure here. Our second story of the rundown. The company that markets itself as the most careful AI lab in the world just had its second major security lapse in less than a week. And this one comes with a very specific warning. If you listen to Monday's Deep Cut, you heard us cover how Anthropic accidentally left internal documents, including details about their unreleased Mythos model in a publicly accessible data store. We called it the safety company that left its secrets in the public bucket. Well, it happened again. Different leak, same week. Early Tuesday morning, Anthropic accidentally published a full source code of Claude Code, their flagship AI development tool, to a public NPM registry. A 59.8 megabyte JavaScript source map file was included in the version package, exposing approximately 512,000 lines of TypeScript code across roughly 1,900 files. Within hours, the code base was mirrored on GitHub and forked more than 41,000 times. The leak revealed some interesting things here. Hidden features including something called Buddy, a Tamagotchi-style AI pet, and Kairos, an autonomous Debian mode for always-on background agents. Also, model code names like Capybara, the same code name for Monday's Mythos leak, and a new one called Noombat. Now, here's the actionable part here. Separately, reports emerged that users who installed or updated Claude Code between 12:21 a.m. and 3:29 a.m. UTC on Tuesday may have pulled in a malicious version of the Axios library containing a remote access Trojan. That's a narrow window, but if you or anyone on your team updated Claude Code in those early morning hours, flag it to your IT team. Check your packages. Anthropic called it a release package issue caused by human error and not a security breach, and said no customer data or credentials were exposed. So what? 2 accidental public exposures in less than a week from a company whose entire brand is built on being careful. That's a pattern, not a one-off. If your team chose Claude because Anthropic was supposed to be the safe option, this is worth a conversation with whoever made that decision. Not to panic necessarily, but to ask whether their response plan looks like. All right, our final story in the rundown today. Google just turned a pair of wireless headphones into real-time language translators for free, and it's available now. As part of Google's March Gemini drop, they expanded Live Translate, powered by the Gemini model, to iOS in 12 countries. The feature works with any pair of Bluetooth headphones, not specialized software. Your AirPods, your Sonys, your $20 earbuds from Amazon, all of them work. It supports over 70 languages and 2,000 language pairs. Two-way conversation mode automatically detects which language each speaker is using and translates accordingly. The system preserves tone, emphasis, and cadence, and it's free for all Google Translate users. This is one of those rare AI stories where the so what is obviously an immediate. If you travel for work, manage international clients, or work with multilingual teams, this changes your week, not just your newsfeed. Open Google Translate on your phone. Try Live Translate with your headphones. It takes about 30 seconds to set up. It works in 70 languages and it costs you nothing. In an episode full of stories about the price of AI, jobs, billions of dollars, and trust, this is the one where AI just made something genuinely useful for free right now. All right, before we keep going here, today's episode is heavier than usual, and I admit that. If you know someone who could use a 15-minute briefing on what just happened in AI, colleague, friend, someone who keeps saying, I need to pay more attention to this AI stuff, send them this episode. It takes 5 minutes, and I genuinely appreciate the support. All right, let's talk about the most counterintuitive take on AI layoffs you'll hear this week. Today's deep cut might make you angry, or it might make you feel relieved. Possibly both, who knows? We just spent the first half of this episode talking about Oracle cutting 30,000 jobs to fund AI. Yesterday, we covered the Q1 data, 60,000 tech layoffs, 23% citing AI in their filings. The narrative writes itself. AI is taking jobs here. Well, enter Mark Andreessen. In an interview on the 20 VC podcast published yesterday, Andreessen, the co-founder of A16Z, one of the most prominent venture capitalists in Silicon Valley, and a person with extremely large financial interest in AI succeeding, delivered a striking counter-narrative. His argument? Essentially, every large company is overstaffed. He estimates average overstaffing at 25 to 50%, with many companies at 75% above optimal headcount. His explanation? Companies went on a hiring binge during COVID when interest rates were near zero, and work from home broke management discipline. They hired too many people for too many roles that didn't need to exist, and now they need to cut. And here's the key line from him. AI literally until December was not actually good enough to do any of the jobs that they were actually cutting. His claim is blunt. AI is the socially acceptable cover story here. It's easier for a CEO to say, we're restructuring for AI than we overhired during a pandemic and our headcount has been bloated for 3 years. He's not alone in this view. IBM's CEO has made similar statements. Oxford economics data published in the same reporting cycle reached a comparable conclusion about pandemic-era hiring bloat. Now, let's be honest about who's saying this. Mark Andreessen runs one of the largest AI investment firms in the world. If AI is taking jobs, that's bad for his portfolio. If companies were just bloated and AI is a convenient excuse, that's a much more comfortable story for someone betting billions on technology. And there's a real tension with the Oracle story we just covered today. Larry Ellison didn't say we overhired during COVID. He said we need $8 to $10 billion for AI data centers. That's not a scapegoat narrative. That's a capital reallocation decision. So who's right here? Well, either both, probably both, or neither, depending on who you talk to and what company you're talking about. Some cuts are genuinely about AI. Some are about fixing pandemic-era bloat with a convenient excuse. The messy truth is that it's both. Maybe at the same time, it's going to be impossible to untangle for years to come. So why is this worth your time? Well, if you heard the Oracle story and you felt a little bit of a chill, that's obviously a reasonable reaction. 30,000 people lost their jobs yesterday so a company could buy more servers. But Andreessen's counterpoint is also useful here. Before you accept every headline that says company cuts jobs to invest in AI, ask a harder question. Was that employer still staffed for a 2021 workload? Because in a lot of cases, the answer is yes. And the AI story is the one that gets the headline, even when it's not the whole story. The takeaway here, the person arguably most invested in AI succeeding just told you that most AI-related layoffs right now aren't actually about AI. That's either the most honest thing a VC has said all year, or it's the most self-serving. Again, probably a little bit of both. But before you let the Oracle headline define your anxiety, consider the source on both sides. All right, before we go, this one's a little bit less fun and a little bit more, let's just call it deeply ironic. Today is obviously April 1st, April Fool's Day. And we are living through the first one in an era of mass market AI deepfakes, voice cloning, and synthetic media. The technology has crossed a quality threshold this year where the old telltale glitches are mostly gone. And already this cycle, Google's own AI assistant reportedly serviced an April Fool's joke prank article that was verified as real news. I'll say that again. Google's AI, the tool designed to give you accurate information, fell for an April Fool's joke and recommended it to users as real. Brands are now adding explicit April 1st only watermarks on their own joke content because the line between a corporate prank and a believable deepfake has absolutely collapsed. So here's a public service announcement. Before you share anything that sounds surprising today, including about AI, maybe wait a couple hours. If it sounds too good or too bizarre to be true, maybe give it until lunch, then check again. In 2026, every day is a little bit of an April Fool's Day. Today, it's just the official day. All right, for tomorrow's teaser, a few things we'll be watching. If OpenAI's next model, codenamed Spud, gets a launch date, we'll have it for you. Same for Anthropic's Mythos, the model we've been tracking since Monday's leak. We're monitoring congressional reaction to the Oracle layoffs. 30,000 jobs is large enough to draw political attention, especially given the AI pack story we covered yesterday. And we'll be looking at whatever April 1st left in its wake. Be sure to tune in tomorrow. And that's Morning Intelligence for Wednesday, April 1st, 2026. If you liked what you heard, hit subscribe from wherever you're listening. Share it with that one friend who keeps asking you, hey, what's going on in the world of AI? You know who they are. I'm Don Michalik. Thanks again for tuning in today, and happy April Fool's Day.